Hey everybody, and welcome to the very first Q&A session for 2021. Tonight is Wednesday, January 13th, and I'm Mark Dannenberg, and this is the Options Moneymaker Q&A session. Aaron Rumley and Michael Kastner are here and will be joining us in just a little bit. But first, let me just start by giving you an overview of what we do and the purpose for this Q&A. We have a very firm philosophy that it is important to learn to trade and then trade to earn. So there's a lot of traders who decide, people who decide that they want to trade, they want to participate in trading. They hear a couple of ideas and so they insert themselves into either trading futures, trading options, or just buying and selling stocks. We believe that there's a learning curve that's necessary for people to be successful and not flame out pretty quickly early on and lose your trading capital. So we make ourselves available not only through the programs that we offer and the support we offer, like with a live trading room, but we make ourselves available every other week to answer questions that you might have to help you continue on your own learning journey. Some of those topics that we might talk about tonight that you might have questions about are the adaptive entry system, which is the software that we use with New Cycle Trading that we are profiling and trading every day in the live trading room. We're profiling the NASDAQ 100 futures using a 5-minute chart, but you can just as easily use the adaptive entry system signals, trading a 30-minute chart for Amazon stock options or a 10 and 30-minute chart for trading SPX cash index stock options. So it's a very versatile system. The Sweet Spot Matrix, which Aaron talks about every day on the Cycle Finder daily crosses at the open of the market, that is for trading stock options. Of course, the live trading room is a core of what we offer. It provides real-time trading and support. You can follow right along with the trades. You can follow right along with the explanations that we provide in the live trading room with each trade, why you would take that trade, why you would skip another trade, how to exit the trade, how to think about how the trade is developing. That is, in my opinion, invaluable in really learning how to trade. Of course, trading, whether you're trading options or trading futures, trading in a simulation mode is an excellent way for you to get comfortable with what you're doing. Our Profit Builder Plus options education program is an excellent way. It's an excellent curriculum if you want to learn how to trade options. And then our futures trading education, where we focus a lot on the risk and reward of futures, is an excellent way for you to build a foundation and understanding of how to trade futures. And then the personal trading plan, which we designed and rolled out to our community last year, is for tracking your own personal profit performance. Now, I personally believe that the personal trading plan is one of the most valuable tools you can have in your arsenal. You're going to need a set of market metrics. You're going to need some sort of a system so that you have a point in time to decide to go in to a position or to skip a certain pattern. And then at the end of the day, I think it's vitally important that you record your performance in some sort of a tool that helps you see where your performance was today relative to where your historical performance has been to date. Maybe you've been trading for 3 months, maybe you've been trading for 6 months, maybe you're just getting started. The tool, the personal trading plan tool, is designed to help you know what your averages are, what your average performance is, and then project that average performance out into the future so that you have some idea of what your overall performance could be for the course of a year. So this is the personal trading plan tool. Now, we have not updated it in a session with our community since last week. So I've pre-filled the numbers for Monday and Tuesday. We had Thursday and Friday of last week. There was just a little technical issue with a recording that I did on Friday, so that didn't go out. But let me just give you an overview here real quick. There's 2 categories that we track to demonstrate for you how the personal trading plan works, and that there are variables that are up to you to decide. So one is we track what's labeled here as LTR all. It's all of the trades that we take in the live trading room using the adaptive entry system signals between 9:30 and noon Eastern time. And then this one that's labeled LTR TB10 is all of the trend bias and trend continuation signals that we take between 7 a.m. Eastern and 4 p.m. or whenever we stop trading. So this is a tool that we're going to come back to here in just a moment. Before we get into that, I want to show the detail tracking tool that we use to keep track of every single trade, every single day, profit or loss, what type of strategy we're trading, what time frame chart we're trading, and of course what the entry time of that trade was. We also track the drawdown on the trade so that we have a reasonable idea of what types of drawdowns we're seeing, and eventually we'll do a deeper analysis on the drawdowns, and we may decide to alter the standard 20-point drawdown that we use when we're trading NASDAQ futures on a 5-minute chart. Now I'm going to scroll back here to the 7 a.m. time frame. Most of our community likes to take a quick screenshot of 7 a.m. forward. So first trade today was at 7 a.m. and then the last trade that we took today was at 2:50 p.m. I'll come back to the other days in a little bit here. So then we take a look at the daily summary. So what I just showed you is all of the detail of the trading that we did in the live trading room. Now, we're recording this every single day, and we've been doing this since the first week of July in order to show the community in our live trading room exactly how this process works. So today we had 3 3/4 points of profit in our 9:30 to noon category where we take all signals. Now that's not huge. It's $20 a point. That's what we're looking at. It's $20 per point trading the NASDAQ 100 futures. So we'll fill that in here in just a minute. We'll translate that into our personal trading plan. Yesterday we had 25 points of profit, and on Monday we had 25 1/4 points of loss. So those two kind of netted out for those 2 days. And last week on Thursday and Friday, we had losses in this category. Now, one of the first questions I get when somebody looks at this and says we had 2 or 3 back-to-back days of losses, does the system really work? My answer is absolutely, and I think you're going to see that a little more clearly as we get into the personal trading plan. But just while we're on this tab here, since we've been recording all of the performance, and we have all the performance detail, we are averaging just under 15 points a day positive in the 9:30 to noon category. That's $300 a day trading a single contract, just under $300 a day. So if you're trading 3 contracts like we are, that's $900 a day. You're talking about some serious opportunity to make some money in just a 2.5-hour period. All right, so in our 7 to 4 category, today we had 54.5 points of profit, and that's at $20 a point. Yesterday we were down 9 points. Monday we were down 4 points. Those are kind of small losses. Friday we were down 12 1/4 points. So we had 3 back-to-back losing days. And then Thursday we were positive 14 1/4 points. So we can't always predict the nature of the market, but the adaptive entry system signals allow us to very effectively trade the trends of the market and trade the cycles of the market. And we certainly will never profess to have all winning trades. As you can see here, we have some losing trades that are layered in there. We have some trades that we netted 5 points on. We have some trades that netted 10 points positive. All we do, folks, is we take the signals, and by we, I mean myself, Michael, and Aaron, whoever is actively hosting the live trading room. We take the signals as they're presented. We don't second guess or discount the signals because somebody will ask us, well, what about this news that's supposed to be coming out, or what about some other factor? We don't factor any of that in. We just simply follow the trends of the market, and we take the adaptive entry system signals and we let the result be whatever it naturally is. So I'm going to take this data for today and I'm going to plug it now into our personal trading plan. So I've already plugged in Monday and Tuesday, and we are on the 9:30 to noon category, the live trading room all. And you can see here that Monday, we ended up with a $1,515 loss. We had 42 contracts that were traded. That's 3 contracts per trade. And this is the point value of our loss times 20 points times 3 contracts. Yesterday, we were positive $1,500, 39 contracts. That's 13 trades at 3 contracts per trade. And today, the 9:30 to noon, we had $285 of, today from 9:30 to noon, we had a 3 3/4 point profit times $20 a point times 3 contracts, and that equals $75. So pretty flat today. And the total number of contracts was 13 trades, and so that's 39 contracts because we're trading 3 contracts per trade. And then in our other category, 7 to noon for Wednesday, January 13th, we had 54.5 points of profit at $20 a point times 3 contracts is $3,270. And we had 15 trades. You can see 15 trades and 3 contracts per trade. So we traded 45 contracts. By plugging in the number of contracts, we're realistically looking at, although it's minimal, but we're realistically looking at the cost of taking these trades because there's a commission and fee that we have to pay the broker. All right, so now I want to do a couple things. I want to take a look back at our 9:30 to noon category. And I'm going to look at these 4 values right up here that you see in the upper left-hand corner of your screen. This tells us that we are through 27.6 weeks. 27.6 weeks, so 27.5 weeks. We've been tracking this on a daily basis through the live performance of the adaptive entry system every day for 27.5 weeks. And Aaron and Michael do a good job of tracking the performance in real time, calling it out into the live trading room and letting people know what the performance was at the end of the day. But we've been doing it now for 27.5 weeks. During that 27.5 weeks, we've had 45 losing days. There have been 45 losing days. Now we focus on winning days and losing days because losing days are an important part of trading. We want to manage them effectively and we want to know how they're fitting into our overall plan. These 2 numbers are the averages that we've achieved so far. We're achieving an average winning day of 21.58 points a day. So on our winning days, we're averaging 21.58 points. And on our losing days, we're averaging 39.98 points, right? So our average losing day is a little bigger than our average winning day. These values right here are what is going to help us forecast going forward. So the 2 numbers that I just gave you, that is our actual average. That is what we have achieved to date. And we want to match our going forward forecast to those values. So I'm going to put in 21.58 in our going forward forecast for our positive days. And I'm going to put in 39.98 minus 39.98 for our losing days. So now what we've done is we've said, listen, we've averaged these values to date for 27.5 weeks. Whether you believe that's good or not, that is the real average. If you are trailing right along with us, tracking right along with us, and you believe that you could improve on that performance, make those adjustments, and you'll start to see those averages improve. If you are feeling 100% confident with how you establish those averages, how you arrive there, and you're comfortable with those numbers, keep doing what you're doing. And then we're going to use those same values and forecast forward for the rest, for the next 25 weeks, 24.5 weeks, so that we build a full 52-week plan. So using all of those values and limiting our maximum number of contracts to 3, I have to lock in 3 here. Oops, didn't want to do that. There we go, to lock in 3. Limiting our contracts to 3, our projected potential income for a 12-month period is 137,832. Now, that number is only a projection. It's based on actual performance for 27 and a half weeks and projected performance for the next 24 and a half weeks. That number could increase or decrease depending on what our actual averages do. But the longer we get into our 52-week plan, the more integrity those numbers have, and the greater likelihood is that we finally arrive at the end of 52 weeks with a pretty solid number that we're pretty excited about. I want to point out we started with $5,000 in this account. So 5,000 growing to possibly 137, 138,000. I think that's a pretty solid number. Let's jump over to our other category. Now we track two different categories. We track in two different methods because we have some people that would like to devote their entire day to trading. They view trading as their business. This is where they're going to allocate their income production time. So some people will trade much longer in the day. Other people have a limited amount of time to trade. And so we show 9:30 to noon, and then we show 7 to 4. And of course, we have a tool, thanks to Aaron, that we have built where we can help you understand that within any particular time frame, what is a reasonable expectation in terms of profit production. So once again, we're through 27 and a half weeks. We've had 40 losing days in this category in that 27 and a half weeks. Our average winning day is 29.27, and our average losing day is 31.83. So I'm going to adjust these forecast numbers to 29.27, and I'm going to adjust the losing day average to 31.83. Okay, so now limiting ourselves to no more than 3 contracts, that gives us a 12-month projection of a $259,000 income. That's a possibility. That's not a guarantee. You don't lock that in. You won't know exactly what it is until you've completed the last day of the last week. But this is helping you as a trading business owner understand what your potential income could be and how you might think about adjusting it. One of the best ways to adjust, if you're 100% confident in these values, you know how you got there, you're comfortable with following along with our trades or trading on your own, and you really are feeling comfortable with your trading, you don't feel like you're holding your breath, you don't feel like you have an emotional roller coaster ride going on every day, you're comfortable with your trading, you could always increase the number of contracts. If I were to go from 3 contracts to 5, none of the contract values will change for the first 27 and a half weeks, but going forward, it will change to a maximum of 5. And all of a sudden, our potential income jumps to $343,211. Again, we started this account with just $5,000. So I think 3 contracts is a very reasonable max. So I'm going to leave that at 3. So that's the process that you go through and should go through every day to update your trading plan. And think of your trading as a business, that at the end, close of your business day, you're tabulating sales, you're tabulating expenses, you've got some payroll in there. Where are you in terms of your monthly projection? Where are you in terms of your annual projected income? And then you can make some decisions to either solidify that by continuing to do what you're doing, or maybe reduce the amount of risk that you have. I mean, I could change this to 2 contracts if I wanted to, and I still have over $200,000 projected income. Or you can change it like I showed you to 5 contracts or more. You can set that number, that value at whatever you choose and potentially increase the amount of income for yourself. So I think that this is a very important component of your trading. And one of the things that this does for you is it helps you know the answer to the question that most traders don't know how to answer. And that is, when is enough enough? So I'm going to come back to this here in just a little bit, but I want to talk about that just for a minute. A lot of traders struggle with that emotional side of risk and loss. They're so afraid of taking the trade, they're so afraid of losing that they start doing things that are not really part of the recommended and advised program. The personal trading plan helps traders see that big picture. We can see what our potential income is from these two accounts over the course of 12 months. Answers the question, when is enough enough? You know that your trading plan is saying, hey, if I hit 30 points of profit for today, why don't I quit? Because I know that that keeps me on pace to earn $259,000, everything else being equal. So there's no reason to subject yourself to risk, and unnecessary risk. And I know in the last few days where we've showed some of these losses, we've showed some losing days in here, particularly in the 9:30 to noon category. I think 3 of those losing days, I believe, had very strong profits in the morning. Early in the morning had very strong profits that would have satisfied the majority of the people in our community in terms of their personal trading plan. So they might have quit trading. We will trade the entire day or the entire 9:30 to noon time period, and we're taking all the signals. And part of the reason we're doing that is so that we can have all of the data that we need in order to help you understand what your potential is in any kind of time frame or category. So we continue to trade, we continue to track and record those trades, and sometimes we end up with a loss for the day, but if it was just Michael or just Aaron or just me trading our own personal accounts on our own, we probably would have quit on some days where we're up 35 points at 10:15, or we're up 25 points at 15 minutes into the market day. So those are some of the things that you got to keep in mind too. We have a lot of people that will tell us early in the day they stop trading and they're done for the day because they've met their goal. And when you hear someone say, I've met my goal, because we read their comments in the room, that means that they're using a personal trading plan and they know exactly what their target was for that day. So the plan also helps understand what a reasonable profit and loss target is for the day. That's what I was just talking about, and what your potential 52-week income. So our personal trading plan that you just saw is showing, let's just say, $140,000 to $250,000 of potential income, depending on how long you're trading, what method you're trading, and everything. And we started with just $5,000 in each account. So that's really as little as 2.5 hours per day to be driving that type of income. It's a little bit less than that now. I actually prepared this number on the slide before I updated the trading plan for tonight, but just 2.5 hours a day, potentially $130,000, $140,000. And I just thought I'd throw in a perspective there for you. According to the U.S. Department of Housing and Urban Development, the median household income in the latest report in the United States was $78,500. So $78,500 is the median household income. And we're talking about a situation where you could potentially have double that, or 80%, not quite double that, for 2.5 hours of work, 2.5 hours of dedicated, committed time. This is what we're hoping to help you achieve if that's what you desire. So with the tools that we've put together that we're going to be talking about in this Q&A session are the futures trading education. You can learn more about risk and reward of futures. We have the options education through the Profit Builder program, and then the adaptive entry system from New Cycle Trading. We have the live trading room, the personal trading plan. If you put all of that together, you are well equipped to be able to trade successfully and create a personal trading business for yourself. If you want to learn more about that, you can go to optionsmoneymaker.com/investor2. All right, so let's take a look at some questions.
Bob is asking, if starting out with $5,000, what money management recommendations do you have if the first few days have a drawdown? What options do you recommend to protect capital and continue to trade the strategy?
Yeah, so if you're going to trade at infinity, where we do, there's two things. First of all, you should have some sort of a plan for yourself. Know what you're willing to risk, and you can set that risk limit in the infinity system, and it will basically shut off your trading if it hits that level of risk. Now, I don't like using that to decide when I'm not going to trade anymore. I like to pre-actual live trading in a non-emotional environment decide what am I willing to risk. If I started with a $5,000 account, you know, I want to give myself some capacity in case we go through a series of losing trades right out of the gate. But I want to know what I am willing to risk at any given time. And if you are just brand new, Bob, you're just starting out, one of the things that I've suggested to folks is, depending on what method you're trading, what time frames you're trading, you could use our values as a guide. So if you had lost 40 points one day, I mean, maybe you want to give it 50, give it a little more than that. Well, that's $800 to $1,000. It's a loss, and it's a big chunk of your $5,000. But that would be saying that you had lost that much without having any other profits to offset it. And there can be periods of time where that occurs. And if you look at the trade detail that we keep track of, you know, we opened the live trading room at 8:45 in the morning. First trade this morning was a 10-point winner, and then there were 3 other trades that were 5 points each. So there's 25 points of profit. Yes, then there was a losing trade of 20 points, but you're still not negative, and it's going to take you a little while to gain a little traction. So I'll just summarize my comments to you and say, choose a number, a value of that a portion of that $5,000 that you'd be willing to risk. Set that as your risk limit with infinity, but then possibly use our values starting out to say, okay, I'm gonna be done for the day, and switch from live money to sim mode and continue to trade to gain more experience. Now, I will also say one last thing, that you should always trade in sim. I personally recommend trading sim for 30 days, for 20 trading days. That's 1 calendar month of trading before you ever touch live money. And if you trade for 4 weeks, Bob, that's 20 trading days, you will most likely have a good feel for what type of drawdown you have on your account at any given time, if you do, how many trades you could expect to win on versus lose on, and we have all that data too. But I think you have to gain a comfort level for yourself and decide through your own personal trading. It's not wise to start with real money right away.
Sim is the best place to start, because as you're learning, you're going to make mistakes, and that's the exact place you want to make mistakes. You can learn from them without having any real money at risk. We talk about in the live trading room trying to get your fill times as close to the bar open as possible. And if you're 2 to 5 seconds after the bar open, you have room to improve. Sim is the perfect place to work on improving that. And then once you're close to the 0 or 1 second after the bar open, then you know you're ready to move to live.
Sim is also a great place for you to decide how you personally want to structure your trades. I know recently Michael's been using a 5-point trailing stop trigger. So if it moves 5 points profitably, it automatically kicks in a closing order that's 1 point behind the current price. Aaron, on that exact same trade, is going to manually lock in 5 points if the price moves slightly more than 5 points. Those are 2 different methods. Now, Aaron's may end up running to 10 points, which would take her out of the trade. It may come back and take her out at 5. Michael's, the trailing stop trigger, will kick in at 5. It may immediately come back and take him out and give him a net of 4. Or I know the other day he was having some trades where the market was moving so rapidly that his trailing stop trigger kicked in at 5, and he ended up closing out for 7.5 points. And Aaron was closing some of those trades for 5 points. So there's 2 different methods, and I think they're both very strong ways to trade. You can use sim to practice and understand what you personally would prefer to use. And if you listen in the live trading room, they're going to, Michael and Aaron in particular, they're there every day. They're going to teach you a wealth of information that will help you be successful.
Rob is asking, what is the risk at 5 contracts?
So Rob, we trade at Infinity Futures. Infinity Futures on NASDAQ 100 contracts is $500 of margin per contract. So if you're going to trade 5 contracts, that would be $2,500 of margin. Our rule, and of course this is entirely up to you, but our rule is in the personal trading plan, we have this value right here, 10%. That means that the margin requirement for the number of contracts that we're going to trade cannot exceed 10% of the balance of the account. So following that logic, if you wanted to use that, if you were trading 5 contracts, which I would never suggest you do until you've traded in sim mode for a month and you've traded 1 contract for a month until you really get comfortable, then feel free to scale up to 5 contracts. But 5 contracts would be 2,500, which means you would want to have a minimum, following this structure, you would want to have a minimum of $25,000 in the account. That's not required, Rob. I mean, it's not a requirement. It's what we consider to be a very conservative approach to money management and managing our margin requirement versus the capital we have in the account.
Kevin's saying you mentioned 500 of margin requirement per contract. What is the per share price of the issue you're trading?
It doesn't matter, Kevin. When you're trading futures, all that matters is what the margin is. I'm going to jump over to the chart here. So here's a chart of, let me expand that a little bit. Here's the chart of the NASDAQ 100 futures. This is on a 5-minute chart. Right now, NASDAQ 100 futures is trading at 12,989 3/4, 990. That's the price point of the underlying index. That's really not relevant to us in terms of our trading, only with the exception of following the movement of the price in order to see whether or not we have a profit or a loss. But our value that we focus on for risk is twofold. One is we've got $500 of margin per contract. That's what the broker requires us to have available in order to even participate in trading this. And the second thing is we have stops. So with futures, it's imperative that you use some sort of a protective stop. Through all of our history, all of our live trading, all of our research, we've determined that the optimum protective stop is 20 points. So that means that on every trade, 1 contract, we have potential risk of $400. It's 20 points at $20 a point. So we're basically risking $400. And then we're looking to make $100 to $200 on every trade. So the value of the underlying isn't really relative. It's not really relevant in deciding when to take a trade and what you're trading.
Mike is asking, is there any way to determine what the highest profitable trade type and what the probability is, trend bias versus momentum versus fractal, etc.?
Oh, see, I think Aaron set you up for that question right there.
So I've gone through this a couple times in the live trading room where we've compared each signal apart from each other, and there wasn't really a very strong, clear winner. Momentum was about half profit per day as consensus, but there's also half the amount of trades per day, so that really makes it about equal to consensus, because we always filter out the momentum trades, meaning if we're in a long trending trade, such as a long trend bias or a long consensus. If we're any sort of trending trade and the bars aren't printing white, we're not going to take the momentum trade. So we don't take as many momentum trades. So our average trades, you can see there are about 4.5. And then consensus, I think are about 9. So there's half of that. And then the daily average is about double of what it is in momentum. So, and most of our win-loss ratios are right around that 75, 73% as well.
I think the more important question is, what's the most profitable way for you to achieve your goals as a trader, as a trading business owner? The best performing category is always all signals, which are the 4 different entry signals that we have in the adaptive entry system, plus fractals. And Michael and Aaron talk about each signal every 5 minutes and fractals throughout the day. And if you just looked from the time that we open the live trading room until we finish, and the last trade, the last possible trade would be 4 o'clock. We usually stop somewhere around 3, between 3 and 3:30. But here, trading a single contract for the last 146 trading days, it averages $938.80 a day. That's trading all signals, including fractals. And you can look at different time frames. You can decide, what time frames you're available to trade, and we can help you understand what a reasonable expectation would be from that time frame.
Can you look at just all signals that same time frame? So when you're starting out, I always recommend just focusing on AES signals only, which would be this category. It's not as profitable, right? So we saw 938, now we're seeing 721. It's still a great daily average on one contract.
So just round it down, $700 a day, 20 trading days a month is $14,000 a month. And that's $168,000 over the course of a year if you did that over the course of 12 months.
So I prefer to trade all signals or all signals and fractals because, and I'm going to quote Craig here, and Craig is one of the developers for AES, it's like throwing the kitchen sink at the market. Because then if you're having a trending market, of course, the trend bias signals are going to shine. If you're having a choppy market, the momentum signals are going to shine a little bit more in those fractals. But it helps then balance out whatever type of market the market's giving you that day. You're essentially trading all signals. It's throwing the kitchen sink at the market. Those are his words. Rex is saying, I understand what you're saying about stopping at 25 points or whatever your daily target is, but that would mean you would never have any big days to offset the big loss days. Have you looked at this, and would it still be better to stop at 25 points? So yeah, we have looked at that. We can put in the profit target column.
Oops, sorry.
On the researching tab, 25. So you're averaging about $370 a day. Your win-loss ratio is higher. I'm pretty sure your negative days are higher. I didn't remember that with the prior number, but I mean, your negative days are less.
Or lower, yeah.
That's what I meant.
So $370 a day per contract if you're taking all signals, and you stop at 25 points. It's a logical assumption that most traders make, that I'm going to miss out on the big wins and I'm going to have big losses. But honestly, you've got to have a stopping point on both your wins and your losses. And if I go back to the personal trading plan, say, listen, if I'm up 25 points, I'm going to stop because I know that that value is moving me towards $137,000, $138,000 a year. And if I lost 40 points today, I'm going to quit. What you're doing is you are trading against your forecast. Now, there's nothing that requires you to do that. You could continue to trade. You could have bigger wins than 25 points. You can have bigger losses, you can have smaller losses, you could lose in the morning and you can make it all up in the afternoon. You could be up, we saw this 2 or 3 days in the last few days, you could be up 30, 35 points in the morning and then you can give it all back in the afternoon. It's just the nature of the market. We believe firmly in having some sort of a goal for yourself so that it's not just open-ended trading.
And there's a meet in the middle type of situation too, and we talk about this in the live trading room. So let's say you're up 35 points and it's 10:30 and your goal is 40 points. Well, on that next trade, because the majority of our trades, I would say about 90% of our trades have some sort of profit on them. Now, some might not get to the 5 points before they come back and maybe stop us out, but they'll have some sort of profit on it. So why risk the entire 20-point stop if you have immediate profit on the trade? Put in a break even or lock in a couple points. Or if it gets to 4 3/4 points a profit, lock in 4 points. So you're adding to your day, but you're not adding more risk to the profits that you've secured so far for the day.
Yeah, that's perfect, Aaron.
Kevin's asking, is the stop pre-programmed and automatic? It is with Infinity, the way that we trade. We use the Infinity Dome. Oh, that picture looks familiar. And so the simple bracket with the auto next to it, as long as that's checked, each time you enter a trade, whether it's by a buy stop, a sell stop, which is how we enter trades for fractals, or whether it's by the buy market or sell market button, each time you enter a trade, that bracket order will be sent automatically with your trade, which means that it'll automatically send a 40 tick profit target, which is a 10-point limit order, and then an 80 tick stop loss, which is a 20-point stop. So that'll be sent automatically with each of your trades. So if something catastrophic happens and we move against your position, your stop's already out there. You're not having to scroll on your dome to put it in there in a rapid fire. In fact, what you're focusing on after you enter the trade is where the 5-point lock is to lock in your 5 points of profit.
One of the things we really like about the Infinity platform is it's a single click. If I was going to go short right now, I would click sell market, and with that one click, I would be in the trade, I would be short, and I would have a order set out there to close my trade for a 10-point profit, 40 ticks, or if the trade moved against me, it will not move against me more than 20 points, which was 80 ticks. Single click puts you in the trade, put your profit target out there, and put your protective stop out there all at the same time.
And Rob's asking, since you use Infinity Futures, do you use their trading platform? So it's not required. You don't have to use Infinity. That's who we recommend to trade off of because of the benefits that Mark has already mentioned. And what he's showing right now is actually my personal trading setup that I have. I have my AES signals on the right. I can see the alert log really easily. I have my price bars pretty much as wide as they can go, so I can see the highlight as soon as it comes on. If it highlights green, I'm clicking buy market. If it highlights red, I'm clicking sell market. And then I can grab the open of the bar quickly as my eyes traverse back to the actual dome, where then I look to lock in my 5 points of profit. But you don't have to. We have some clients that decide to use different platform. We've had clients switch to Infinity because of the ease of the use of this platform. It's, in my opinion, it's one of the best just because of how quick it is to get in and out of trades. I mean, so our trades are honestly, sometimes I had a couple today that were about 4 seconds long, and the Infinity platform made it easy to get in and out in that amount of time.
And Bill's asking, can you show what the dome would look like with a trailing stop order? We don't have a live dome open right now, Bill. We don't have any of our domes open. This is just a screenshot of the dome, so I can't show that to you right now. But basically, it would say trailing stop where it currently says simple bracket. You would still have auto checked, and this box labeled distance which is shaded out right now, would have a black background, and you would have a value in there because your profit target is your trigger. So you would have a trigger. So you want the order to, Michael's been using a 5-point trigger. You would have a order to close kick in at 5 points of profit. The distance, which would be in this value right here, might be set at 4 ticks, which is 1 point. So it means that once it hits 5 points of profit, it will only close you out of the trade when it has moved back. It has reversed 1 point against you. So if it hit 5 points of profit and then moved another 3 points before it moved back 1, it would have moved out to 8 points, would have moved back 1, and would have closed you out at 7 points. So the difference between simple bracket and the trailing stop is you've got profit and protective stop on simple bracket, but with trailing stop, you've got trigger, protective stop, and distance.
And we do have video out there. We did a video for New Cycle Trading's website. It's at newcycletrading.com/education. That's where the AES training videos are. There's how we use the Infinity Dome for the bracket, how we use the Infinity Dome for the trailing stop, how to trade fractals. A lot of good information out there. Kevin, yes, that's what Mark was showing. The execute the trade, it's just a point and click on the Infinity Dome. We don't trade off of the actual TradingView chart. You can. I don't recommend it. TradingView is really good at charting. I would not recommend using them for trading. It's just a personal advice there. Infinity, though, if you want to go long, you click the buy market button. If you want to go short, you click the sell market button, and it's pretty much as easy as that. Kevin's asking, how long has Aaron been trading? I think it's been about 10 years now.
That's about 10 years, yep. And you're only 18, so you got an early start.
Started young.
Yep.
Actually, if we count the class I took in middle school, we're going to add more time to that, but actually actively live trading about 10 years. Rex is saying, what's the purpose of the alert log if you enter in the first 3 seconds of the bar anyway? The alert log, there's a few things. So nothing's 100%. There's sometimes where my chart lags, but the alert log doesn't. So it won't print the next bar. This doesn't happen frequently, but it won't print the next bar, but the alert will come on for it. So it's kind of a fail-safe so that you know you have 2 ways to look for a signal. Also, when we're in trades for quite some time, it helps me remember what we're in, because sometimes I can get a little sideways there as we're tracking quite a few things. So the alert log helps me keep track of where we are, what's the last trade that we've taken. Also, unless you're going to sit there and actually time out 3 seconds, the alert log really helps you identify when it happens within the first 3 seconds. Because if it comes on 2 seconds, you know, if it comes on 4 seconds, we're skipping it. So it helps really take away any question, oh, was that 3 seconds or was that 4 seconds, or what time did that exactly come on? The alert log will tell you.
Here's one as an example. It came out at 18:25 and 5 seconds. Unless you're really focused on the clock, you might lose track here, but you can see in the alert log when it came on. It's not a valid signal. It's not something that we're not going to trade that. The other thing is, and we always encourage you to do a lot of what we do a ton of research. And the alert log makes it so much easier to go back and review. Say you wanted to understand what happened during a 2 or 3 hour period when maybe you stepped away, or you just didn't understand what was going on, didn't feel good about your trading. You can go back and you can replay those bars. You also have the alert log, which will confirm for you whether or not it was a valid entry. This one came on at 19:50 and 1 second. So you know that it was a valid entry. You know that you would have been in that trade. If it came on at 19:50 and 4 seconds, you know you would not have been in that trade. So it takes a lot of the confusion out of the research and looking back and replaying some of those.
And there can be times where the signal flashes on, and if you blinked at the wrong time, you're not going to see the highlight of the bar because it'll already be gone, but it'll show in the alert log. And it's still a valid signal, and those trades still work out. So it helps then be like, was that a signal?
Yeah.
I'm I'm not sure if that was a signal. And honestly, when that happens, most of the time, if you're like that, you can get a favorable fill because it's pulled against you and you're not in the trade. So the alert log also helps with that as well. Kevin saying, how long before you became comfortable trading? I personally started with options first. I'm a little bit more conservative, so I started, tracking them for about 2 months before I started live trading, just to really understand. I had some foundation that I had gone through, of course, first of learning options. But then when I started trading, I virtually or sim or paper traded for a couple months before I started live trading. But then futures seemed and are still to me very much easier than options. There's nothing, there's not as much you have to understand. You don't have to understand about a long leg and short leg and expiration and time value and delta. You're just long or short. And so futures, I sim trade for about a month before I started.
Virgo's asking, does the stops for profit and loss apply to full cycle? No. Let me jump back to the tracking.
So the stop, if you're talking about the full trend bias cycle, it's still tracked with a 20-point stop because you have to have some sort of protective stop out there. But otherwise, you're exiting when the cycle ends. So on a white price bar or a reverse price bar.
So here's a great example today, the 950 trade. It was a trend bias trade to go long. If you were holding for 10 points, it hit 10 points. If you were holding for 20, it hit 20. If you're holding for 30, it hit 30. If you held for the full cycle, if you waited until the full cycle ended by printing a white bar or a reverse signal, you actually lost 20 points. So we track all of this because we wanted to know, what's the sweet spot of 10, 20, or 30. For now, in the current market conditions, I feel our sweet spot is still a 10-point profit target, but manually locking in 5 points when we are able to. And I think that our numbers are actually conservative and understated. There's a lot of opportunity where Aaron may lock in 5 points and it moves to 9 points or 9.5 points, doesn't get to 10, and we're not making an adjustment. It comes back and takes us out at 5 points. If you're trading your own individual account and you lock in 5 and then you have an opportunity to lock in 7 or lock in 8, you're probably going to do that. And then if it doesn't hit your 10-point profit target, you've had a better profit. We just drew a line in the sand, so we're going to keep it very simple. We're going to make it really easy. We're either out for 5 or we're out for 10 in terms of profitability. And then in terms of the loss, we have a 20-point stop, a limit on how much we'll lose. But there are trades where we reverse ourselves out of the trade and take a loss, and it might be significantly less than 20. So a lot of people assume that it's always a 20-point loss. It's not by any means always a 20-point loss.
And as we get later in the day, such as that trade that you're specifically pointing to, um, Michael and I will help you find ways to adjust, offer suggestions if you're looking to reduce risk on the trade. So I remember that trade specifically, there was a bar that just looked like it could become a fractal. It didn't end up becoming a fractal, but it was a place that you could put your stop at, because if we broke that, most likely we were going to continue to move lower. And that's what happened. And so you got out, I think it was only about a tick or two better, but it was, we're here to try to help you conserve your profits that you've accumulated throughout the day by offering suggestions if you're looking to reduce risk at all.
Mark, Mike's asking, it seems a lot of trades that get stopped out after 5 points go higher. Have you done any research that involves scaling out of contracts to try and stay in the positions longer? And would that balance out the 20-point loss?
So we've not done that level of research. That's a little more advanced, and scaling out of contracts assumes that you're trading more than one contract. And what we started with, Mike, was wanting to teach our community how to do this successfully. And then if you decide you want to add some other level of complexity to it, that's something that you can experiment with on your own in sim mode. See whether or not you're scaling out of contracts or holding some contracts longer actually does result in better performance. Until you have data, until you have a reasonable amount of data, you can't make any assumptions. One of the things that I've learned since we've started building all of this data, in another category, by the way, just as a side note, we've got data that goes back 2 years on daily trades. Until you have a certain amount of data, you don't really know what the performance would be. And what I've learned about working with traders over the last 30 years is they make a lot of assumptions. They see something occur once or twice, or it happened today, so they make a lot of assumptions and they start telling themselves stories about what exists under that condition, and they're not valid. They're not valid assumptions. It's a reasonable assumption to have a question about and be curious about and want to go explore. And that's where you start doing some of your own tracking, detail tracking, to understand how that condition will play out over a period of time. But if you see it once or twice and make an assumption about it, it's not valid. So do some research, scale out of contracts, and that might be something that you find is a real value, a win for you.
Eric's saying, have you experimented in sim or otherwise with cost averaging instead of taking some of the 20-point stop outs?
I've done quite a bit of cost averaging myself. We've not tracked that anywhere here in the data that Aaron and Michael track for you every day. Here's a couple of thoughts for you, though, if you want to experiment with that in sim mode. The price has moved to 20 points against you. You've really got to feel comfortable that that's going to reverse and that the chart conditions still support holding that position to add more to it. Now, maybe there's a condition where it's a very frantic, volatile market and it's moved 20 points against you. Listen, I've had trades that have moved 21, 22 points against me, and then it would have given me 50 points of profit. But when I go back and I look at those, there was some condition within the metrics, within the indicators that would have said, yeah, I'm not so sure I want to hold this. So I would take the 20-point stop out. And almost always, Eric, there's going to be another opportunity to re-enter that trade. So I actually don't think there's anything wrong with, say, starting with one contract and adding another contract instead of being stopped out. But you've got to be pretty confident that the chart is supporting that you should still continue to hold that trade. And we've used 20 points as a protective stop. It's kind of an optimum number. We started doing this research about 4 years ago, and we were looking at using no stop, which is kind of ridiculous in futures. We were looking at using 30-point stops and 20 and 10, and we had a ton of data that supported that 20-point was kind of an optimum level. If it moves 20 points against you, you probably want to reevaluate whether or not that trade is still good. And if you get stopped out, just look for the next re-entry. And just, this isn't something that we teach in the live trading room or that we talk about too much in the live trading room, but if I was trading a 5-minute chart and I got stopped out for 20 points, and I still think that the 5-minute chart is telling me I should be in that direction. So say I was short and I'm stopped out, I think the chart's still saying I should be in that direction if all those conditions exist. What I would do instead is drop down and look at a 3-minute chart. And I might use a 3-minute chart, a typical adaptive entry system signal, part of the system signal set. And I would use a 3-minute to re-enter that trade and see if I can't then ride the direction that I believe is still valid. Folks, I don't see any other questions out there. Any other thoughts? We'll give it just a minute or two here and just see if somebody has another thought for us. Just taking a look at the what's going on tonight's trading. We're in a long trend right now. That long signal came on at 1910. Did it? I'll just go back and look at the alert log and see. It came on at 1910 and 0 seconds exactly. So there's a valid signal to go long. And that signal came on. Sorry, I got a window in the way here. That signal came on at 12,981 and a quarter. And on the next bar, it moved up to 993 and a quarter. So it would have hit our 10-point stop. On the bar that we entered on, it moved up 6 3/4 points. So if Erin was trading that, she would have locked in 5 points and would have come back and taken us out at 5 points. And so we'd be in and out of that trade all within that same 5-minute bar. If you're not locking in 5 points on the next bar, it would have hit your 10-point trigger. The total movement to the highest point so far is 981 and a quarter up to 13,001 and a half. So 20 points. That's the maximum movement so far from entry to the highest point. There's a couple trades in there too. There was a continuation trade and there was a short momentum trade. Rex is asking, is there slippage on the stop? So when it hits your stop, depending on how fast the price is moving, you might have some slippage. I don't think the slippage on the stop is as common as slippage on the open. And if there is slippage, I'm going to just say the majority of the slippage is going to be maybe a tick, maybe 2 ticks, and I think that would be fairly extreme. It's not a big deal. People worry about slippage. Slippage, in my opinion, really is not a big deal in the bigger scheme of things. All right, I don't see any other questions. Michael, Erin, any additional thoughts?
I don't have any more.
Okay. All right, well, thank you all for being here. Welcome to 2021. Let's hope it's a great year for everybody, not just here at Options Moneymaker and our community traders, but for our entire society and our entire world. We deserve a good year, all of us do. We look forward to helping you continue to learn. Michael and Erin will be in the live trading room at 8:45 a.m. tomorrow, and we look forward to helping you. Last question, there was one from Kevin. Last question goes to Kevin. In option trading, you deal with the bid and the ask, not so much in this space. Nothing like that in this space. You simply are clicking sell market or buy market, and it's an instant fill. In options trading, you've got the bid and the ask, and depending on the difference, the spread between the bid and the ask, you're most likely trading the mark or the midpoint. So sometimes it feels like you're negotiating with the market to get your trade filled, because you don't want to use market orders with options. Here, with futures trading on the Infinity platform, you click sell market, you click buy market, you're instantly into the trade, and you're instantly in a trade that already has your price or your profit and your protective stop parameters set. So, all right, I'm going to go ahead and shut down the room. Thank you very much for being here. Thank you, Michael. Thank you, Erin. And we'll talk to you all again tomorrow.